Yet again, I'm back, your host, in today's video presentation. My name is Wando Franklin, the lead tutor, the Chief Executive Officer, the pioneer of FCO Accountants Institution Center. In today's video presentation, we are focusing on one component of consolidated statement of financial position, and that will be adjustment of inventory when we have unrealized profit. Before I get started, I just want to ensure that you know this video presentation is applicable for students doing ACCA, financial accounting at knowledge level, financial reporting at skills level, and also the CA 2.1 under ACCA, and also CA 3.1, advanced financial reporting, and ACCA also. Also, the strategic business reporting under ACCA professional level. So before I get started, I want to encourage all our viewers to ensure that you ask questions specific to this topic in the chat box. All questions raised will be attended to, depending on the availability of time. Also, I want to encourage our viewers to make comments about this video in the comment section. All the comments made will be taken very, very seriously and will be used to improve our delivery. Having said that, we can now go to the unrealized profit. Please make sure that you pay particular attention. Unrealized profit will occur when any member within the group, they sell the goods to another member. And at the reporting date, these goods are still within the inventory. That means there is no profit made because you cannot trade with yourself. As a group, it means you become one. You only make profits when you sell to the external customers. Is that okay? Now, it does not matter who is selling. All the time, the unrealized profit must be deducted from the closing inventory. From the closing inventory. Is that okay now? So we can read this question together. Cat Company has held 85% of share capital of Dog Company for many years. During the current year, Cat Company sold goods to Dog Company for $15,000, including a markup of 25% on cost. 60% of these goods were still in inventory at the year end. The following extract was taken from the accounting records of Cat Company and Dog Company at 31st March 2008. We have the opening inventory. We have the closing inventory. What is the figure for the inventory to be included in the statement of financial position of the Cat Group at 31st March 2008? So now we need to find out what was the unrealized profit. The question of markup and margin must be understood properly. So we go to I want to explain markup Markup is gross profit based on costs. Gross profit based on costs. So we have markup is gross profit based on cost. And margin, these are very important concepts. Margin is gross profit based on revenue. Gross profit based on revenue. Therefore, it is important to notice that you are using the correct gross profit. In this question, we are given the selling price. We cannot use the selling price. We cannot use the markup on the selling price. That would be wrong. So we are given the markup and we are given the selling price, which is revenue. These are not compatible. So what do we need to do? We need to change the markup to margin. Markup, change it to margin. The markup here, we are told it's 25 over 100. Changing from markup to margin, you scale up. So here it will be 25 over 100 plus 25. It will be 125. So now the profit will be, the profit will be 25 over 125 multiplied by 15,000. And here we are going to have 3,000. But the concept is unrealized profit is always in the inventory, still not sold, or rather in the goods, which are still in the inventory. So we are told 60%. And realized profit here will be 60% of 3,000. And this will give us 1,800. That is unrealized profit. So now the inventory to be included in the statement of financial position should always be the closing inventory. So the closing inventory here we have for cat at 750 with 750,000, and dog has 400,000. Less unrealized profit. The unrealized profit here is 1,800. So the inventory to be included will be 1,148,200. That will be the inventory to be included in the statement of financial position of CAT Group at 31st March 20X. So the correct answer here is D. We have answered this question together. And I just want to remind our viewers to share and like the video. I also want to thank all our subscribers for the support you have given us from inception. May the Almighty God, Jehovah, bless you beyond measure. Thank you.